Hello, I'm Bernard Hickey from interest.co.nz and welcome to another double shot interview where we bring in someone who's got something interesting to say about the currency, taxes, property, whatever. And of course, every week we do a roundup of the currencies market and what's happening in the global economy with Dan Bell from HighFX. Welcome back, Dan. We should call it the Never a Dull Moment report because there just never is a dull moment in the world of currencies, particularly this week, where the Reserve Bank of New Zealand came out with its monetary policy statement for the June quarter, made some comments on interest rates, the outlook for interest rates, and on the currency, which again moved the currency around. And the New Zealand dollar hitting on Thursday night 83 US cents. What came out of the monetary policy statement that moved the currencies around?
Yeah, so the OCR kept at 2.5% as expected. And the statement itself pretty much indicated that interest rates are going up, and I think most of the market was expecting interest rates to go up, but to see that sort of confirmation that over the next 2 years interest rates will have to go up, and the current setting is extremely accommodative. So the Kiwi dollar strengthened on the back of that statement, again pretty much as expected, and pushed up over just over 83 cents overnight. So another all-time post-float high for the Kiwi.
And even though the Reserve Bank governor came out on Thursday afternoon and said, "Hey, you guys have overreacted to what I said," the markets still keep pushing it higher.
Yeah, pretty much. He said he was surprised to see the strength in the New Zealand dollar, but I think it's a relative. Currencies are it's a relative value story. So I suppose the expectation that our interest rates are going to go up. The underlying economic environment in New Zealand appears to be improving. There were some positive elements as far as the forecast from the growth that's going to be attributed to the Christchurch rebuild. So offshore investors are looking at that and thinking New Zealand dollar is still not a place to park your cash, and you look around the world and things are still pretty tough out there in most other economies.
The Reserve Bank governor also said he didn't like the currency being up here, but he seemed to turn a blind eye to the strength of it. How did the markets view his comments about intervention, not intervening, his views on the currency?
Yeah, I think the market's reasonably comfortable with the RBNZ stance at this stage. The conditions whereby they would intervene, I think you'd have to see quite a significant momentum in the Kiwi dollar on a trade-weighted basis, and the New Zealand dollar against the Aussie dollar is still relatively weak on a long-term sort of basis. So at this stage, I don't think we're going to see intervention, and he was pretty clear-cut about that. I think if we wake up tomorrow and suddenly the Kiwi's 5% higher on a TWI basis, you may start seeing some more question marks there. But at this stage, with commodity prices at these levels, if you look at the New Zealand dollar, at the sort of 10-year average in the Kiwi, it's currently sitting up about 27% above the 10-year average. So at sort of 82.5 today, we're about 27% above that. The 10-year average, if you look at something like the CRB index, which is a broad measure of commodity prices, that's about 24% above the 10-year average. So the Kiwi is pretty much trading in line with these stronger commodity prices. If you look at the Aussie dollar versus the US, that's about 40% above its 10-year average. So I suppose the central bank are looking at commodity prices and justifying the higher Kiwi on that basis.
So how high could the currency go? 83 cents? Are we looking at 85, 90, parity?
Yeah. 83, obviously, it only briefly touched 83 in the interbank market overnight. From a technical point of view, traders and analysts are looking at 85 as the next big level. 90, anything above 90, it's probably it'd be hard to see the Kiwi get that high. But listen, I don't think anyone would have thought that the Kiwi would be at 83 cents this time 12 months ago. So unfortunately, anything's possible. US interest rates continue to be effectively 0%. So in that environment, the Kiwi is still relatively attractive. However, I think the sort of risk-on, risk-off, trade that we've been seeing with the US dollar, so the US dollar is generally stronger when we're seeing a risk-off environment, should continue to keep things contained. So concerns in Europe and concerns with the global economy in general, I think will keep the Kiwi contained.
Just across the Tasman now, some weak jobs numbers in Australia, which helped keep the Aussie dollar relatively weak versus the New Zealand dollar. New Zealand dollar up to 78 Australian cents. How's that cross rate looking at the moment?
Yeah, it's really reversed the recent sort of downtrend that we had. After the earthquake, we got down to a low of around 72.50 against the Aussie dollar, which was close to a 20-year low. And literally it was about 3-4 weeks ago, the Kiwi Aussie was trading around 73 cents, and most analysts were expecting the RBA to raise interest rates, or at least to start making a suggestion that they would raise interest rates. And that hasn't happened. So the RBA statement this week, they left interest rates on hold and weren't as hawkish as expected. So the Aussie dollar came under pressure there, and then the employment numbers yesterday, another weaker number than expected. So market was expecting 25,000 new jobs. They only added 7,500 new jobs, and the previous month of April was actually revised down as well. So you're seeing a bit of a negative trend in the jobs numbers in Australia. I mean, their unemployment rate is still 4.9%. So again, on a relative value basis, the Australian economy is still much stronger than elsewhere. But their currency, again, Aussie US 40% above 10-year averages. It's still pretty much reflected in the currency.
A lucky country, maybe not quite so lucky this week.
Indeed, yes, indeed.
Now, looking across to Europe, where we saw the European Central Bank decide to leave interest rates on hold, what's the feeling out of Europe at the moment, not just with their interest rate outlook, but that sovereign debt crisis?
Yeah, so on the interest rate outlook, the ECB left interest rates on hold at 1.25% overnight. Trichet's comments, he used the term strong vigilance is needed, so basically flagging a hike in July. So we're pretty much expecting him to raise rates in July. However, he wasn't as hawkish. I think he wasn't suggesting that we're going to see a continued hiking cycle from here. So perhaps it's going to be a wait and see. Obviously, the background, in the background with the sovereign debt issues in Greece, and we continue to get mixed reports out of Europe. Clearly, there are continue to be issues there. On one hand, you've got the rating agencies, issuing their concerns that ultimately, Greece could be in a position where they've technically defaulted. But on the other hand, the EU, the IMF are in the background trying to put together some kind of deal, that would see them sort of reprofile or extend their debt obligations.
It's like watching central bankers juggling with chainsaws, really. You just know eventually someone's going to lose some fingers.
Big time, yeah, and it's certainly not sorted, and it's certainly not over. So watch the European debt issues closely, and it's really hard to see how they're going to sort it out without someone either taking a haircut, or some type of negative or contagion impact on the broader markets.
Across the English Channel, Britain, another decision from the Bank of England, and the New Zealand dollar versus the British pound, 50.6p or so, another record high there. How's the relationship between Britain and New Zealand on the currency basis?
The Bank of England left interest rates on hold at 0.5%. They don't make a statement when they don't change rates. So, situation in the UK, their economy, continues to struggle. One of the credit rating agencies coming out this week and issuing a little bit of a warning that they could be, losing their AAA rating. The UK are struggling. I mean, they've got, they're trying to sort of fulfil some austerity sort of measures, but at the same time, the economic backdrop there continues to be very sluggish. So, continues to be very challenging for the UK. In contrast, the New Zealand economy, outperforming relative to the UK, and the Kiwi pound trading at that all-time post-float high at 50.60. So, just sitting over 50 at the moment.
And across the Atlantic, where this week we saw Ben Bernanke, the US Federal Reserve Chairman, come out with his big speech on what's happening with the economy and whether or not he'd do QE3. What was your view on that speech?
Yeah, I mean, he pretty much indicated that the US economy is coming through a bit of a soft patch. Now, the recent economic data has confirmed that, but at the same time, he didn't really flag anything about QE3. He indicated that interest rates are going to stay lower for an extended period. So really just reiterating the recent rhetoric that he's had in previous announcements. So. Again, pretty tricky for the US. Their economy, unemployment and the housing market continues to be a drag. Also, the equity markets there. I mean, we saw a bounce on the US equity markets overnight, but they're off 6.5%. The US equity markets are 6.5% lower from the highs that we had in May. And last night we saw a little bit of a bounce in the Dow Jones, for example, but that was previously it was 6 days of decline. So a little bit of concern that maybe the equity markets are sitting at a pretty critical point at the moment. A critical level in the Dow Jones that we'll be watching is the 12,000 mark. And obviously, if we see it break under 12,000, it'll give investors a little bit of a fright and perhaps suggest that we could see more downside there.
And if it does break through 12,000, that's a sign risk is off, and maybe the New Zealand dollar not quite so strong.
Correct. Yeah. So a breakdown in risk appetite will see the US dollar strengthen, and that's been a pretty strong correlation over the last few years. So weaker equity markets should see the US dollar firmer and see the Kiwi come off.
Fantastic. Dan Bell, never a dull moment on the currencies markets. Dan Bell there from HiFX. I'm Bernard Hickey for interest.co.nz. That was another of our weekly currencies reports.